Welcome back to Everything Money. In this video, you will learn about the company Verizon and its stock. We'll show you our process on how we invest in companies like this. We'll use our 8-pillar and our software to show you the financial of Verizon and separate the company from what you're paying from the stock. We'll show you what we think we should be paying using our stock analyzer tool. And if you want to trade Verizon and make money in the short term, you can join Mo at the end of the video and he'll show you all the trends and charts. But first, why should you watch this video? I bring your questions about Verizon to a couple guys that own and operate over $100 million in real estate, multiple businesses, and stocks, and they'll provide you and myself with their mindset about investing in Verizon or maybe avoiding Verizon, which I think Paul might be. Paul, Warren Buffett buys this. You wanted to highlight your thoughts on that. Give me your take on Verizon, baby. You know I love you.
Thank you, Seth. First off, follow us on Instagram, Everything Money Investing, and follow our 3 personal accounts.
So our mothers love us.
So our mothers love us. And by the way, your mother would like to
Mine?
would like to be invited to Switzerland in case you do not want to go.
She said that.
Did you see that on the Facebook post?
She's very active on Facebook, Paul.
Yes,
you know
she is.
this.
She
is a boomer.
Did you know that she doesn't like Republicans? I like you, Mrs. Kirchanen. I'm just
she tags you in those posts?
No, she doesn't. I just see them.
I'll have her start.
Yeah.
Go ahead on Verizon, Paul.
I don't like Republicans. Okay, anyways. So Verizon is interesting. Verizon is Berkshire Hathaway, I believe, owns a nice stake in Verizon. This is what I want to tell you guys about process. We own Alibaba. I didn't buy Alibaba because Charlie Munger liked Alibaba. I liked Alibaba and I bought it because Charlie Munger trusted the numbers out of Alibaba. There's a big difference between that. With Verizon, I have no freaking clue why Berkshire Hathaway owns Verizon because I look at the numbers and go, I don't get it. So what do? I don't buy Verizon. That's what I want to teach here about the process. Like, here's the best investor of all time. His company owns Verizon. I have no idea why, and I still don't own it. Okay, so let's go look at Verizon using our exclusive software. Go to the 8 Pillars tool, type in Verizon. I'm glad our intern didn't F up the name here. He's probably like sensitive now, going like, is Paul just being a dick? Yes, but I'm just being funny about it. It's just funny to me.
Look, I told him when we hired him.
Skin.
I told him when we hired him, Paul, if he can watch a Dave Chappelle stand up and not be offended, that is the show and how we speak in our.
We're not trying to say that we're Dave Chappelle, but we just say whatever we want to say.
Yes, and you have to be able to take it, baby.
Yes, and it's a lot worse when the video cameras are off. By the way,
I assure you.
Yes.
Keep going.
Okay.
Pillar number 1. Oh no, market cap. What is the market cap of Verizon?
So it's a $210 billion company. Pillar number 1, we want, this is probably why he owns it. The 5-year PE is 10. We want it under 22.5. Yeah! Check mark there.
Yeah, that's pretty good.
But the 5-year return on invested capital is 2.1%. We want it over 9%. Massive X there. Okay, so here's where I got confused. So this 5-year PE is very interesting. Their free cash flow last year was negative $23 billion. Their dividend yield is 5%, paying out $10 billion, and their average 5-year free cash flow is 6.3. It is all over the place here. So something's going on in the books of Verizon that we have to really understand. I don't know what that is. I really have no idea what's going on. So we're going to go dig deeper and see if we can find it. But this is where you'd use the annual reports here to go to find the 10K, which is right here. It links right to the 10K for every company. You can pull up the 10K and start reading about the company. I highly recommend that before you do an investment in any company. So pillar number 3, we're going to go to our income statement and our exclusive software. We want revenue growth over the last 5 years, 124 to 134. Check mark there. Now remember, guys, Verizon is the company that does not employ Seth's love of his life.
That's right, Lily from AT&T.
We have our Instagram account only follows 6 people or 5 people. 3 of them are here, and she's one of them. Who's the other one we follow?
Oh, the 4 of us.
No. The cat lady.
Carol Baskin.
Carol Baskins. That's right. Yeah. Hi, all these cool cats and kittens.
You should start every show. You used to start every show like that.
There's a new
Paul.
one. There's a new series.
Yeah, it's garbage. No, it's garbage. I watched 5 minutes of it. Verizon. Warren Buffett bought this at the end of 2020, in the last quarter of 2020.
So scroll up a little bit.
Investing $9 billion in it.
Okay, go ahead. Go further south.
Yeah.
I've talked to.
This is an article from last February, Paul.
Another value investor who doesn't get it either.
Doesn't get why they got this.
Who?
Jimmy.
Oh, Really?
Jimmy from
He
Learn
doesn't
to
get it?
Invest?
Yeah, doesn't get
Jimmy
it.
from Learn to Invest doesn't under.
He's
Yeah,
like, I don't get it.
You and Jimmy have a nice little relationship now, don't you?
Yeah, we talk on the phone every once in a while.
Yeah, follow Jimmy, Learn to Invest. He's another great investor, and he's been on our show, and we maintain communication with him all the time. Go ahead, Paul. Talk about Verizon.
All right, pillar number 4, we want the profit growth. So we scroll down a little bit. We go to the net income number, 16 billion to 22 billion. Check mark there. All right. Pillar number 5, shares outstanding. We want shares decreasing, which is therefore increasing your ownership of the company because your share count stays the same. The company's share count decreases, therefore you're owning a bigger percentage of all the revenue and profit. Scroll down, 4.08 billion to 4.14. It is increasing ever so slightly, but it's still increasing that for an X. And they had a big jump in shares, probably because they made an acquisition right over here.
Well, what were you saying?
Last 4 years hasn't changed. That's a good thing.
Yes.
Pillar number 6 involves their debt. Total long-term liabilities divided by 5-year free cash flow, Paul.
So, guys, long-term liabilities, we want companies with less debt, manageable debt. Just like you at home, if you and your neighbor are the exact same person, exact same job, exact same house, but they have $1 million in extra debt than you do, you're less likely to go bankrupt than them. Same with a company, same with all companies. It's no different. I like to look at all companies like I look at my personal financials. So, what do? I go to the 5-year average free cash flow. Now remember, it's 6.3 billion, but it's heavily skewed by last year. I multiply that by 5. That is $31.5 billion. We want their total long-term liabilities to be under 31.5. I'm very confident it is not. So we go to the balance sheet, scroll all the way to the bottom, $233 billion.
10 times?
Yeah, it's a lot. But remember, let's go to their free cash flow statement. Look at their free cash flow. I don't know what happened here. Oh, they did a lot of capital expenditures. That's what it was. Their free cash flow was heavily skewed by last year's big capital expenditures. So this is heavily skewed. Cash from operations less their capital expenditures. This is the lifeblood of a company, guys. You can use free cash flow to do one of 5 things. Pay dividends, buy back shares, pay down debt, which they need to, make acquisitions, and reinvest back in yourself. We added the free cash flow line here to make the math easy for you. But if you want to look here, 2.9 billion to negative 22.8 billion. That's an X. And in between, they had 15, 17, and 19 billion dollars in free cash flow. A company like this, first off, I'm going to wipe out last year. Figure out what the $63 billion in capital expenditures was for. That's a huge, they tripled their capital expenditures in that year. What was the reason? Can you Google that, Seth?
Mm-hmm.
I hear you clicking away at 14 words per minute.
It's 31 words.
Oh, really? That's
Probably not.
slower than Xavier.
Did you do a test, Xavier?
I know, that's what I mean.
It deployed $10 billion for its C-band spectrum from 2021 to 2024, spending that additional $18 billion in annual CapEx spending.
Okay, so let's look at this. Look at Verizon Wireless capital expenditures for 2021. So again, guys, understand the $63 billion number because it's a big jump. But we read reports that for the year, they're supposed to do 17 to 18 billion in capital expenditures, which actually would have been down from last year. But something to understand, capital expenditures tend to be one-time items. So I would not cry so much about that. And I do think it skews, I don't think it skews, it 100% skews our 5-year average. If this just goes to 0, it makes the 5-year average free cash flow over $10 billion. If this free cash flow just goes to 0.
Are you going to have a tough time with pillar number 8 here?
Yeah, I mean, this is an X. What we usually do is we take the 5-year average free cash flow, multiply by 20. That's $126 billion. What is it actually?
210 is the actual market cap.
Now, if we did a normal year of 15 billion in free cash flow, that would make this average 13 billion times 20 of $260 billion. And maybe that's why they invested in it. So it's maybe being skewed right now to the downside. Now, what we're going to do is we're going to use, so here's our 8-pillar tab. It just shows you the recap here, a lot of X's. Let's use our stock analyzer tool to make assumptions about the future, because every investment's the present value of all future cash flow. We have to look at revenue growth, profit to determine a value for the future. It's all unknown, so we want to be conservative. So our most famous part of our software, the stock analyzer tool. I love going on our Discord chat and just seeing screenshots of stock analyzer
yes,
tool.
People love it.
I'm like scrolling through. Yeah. Anyways, 10-year analysis. Okay, let's be conservative. Let's say 1%, 2%, and 3% revenue growth.
Oh, wow. I was going to go less.
You were going to go less?
Yeah.
Where are you going to go to?
I was going to go negative 101.
Let's do it. Profit margin.
I'd probably put 12 on the high side, right?
Not a high side. Because look, they did that acquisition, and it really helped their
I
profit
forgot about
margin.
the acquisition skewing things, yeah.
So maybe go 13, 15, 13, 14, 15.
Okay.
Free cash flow margin. Oh boy, that's the problem. It's so skewed by that. Let's go 7, 8, 9. PE, 10, 12, 14. Price to free cash flow, 10, 12, 14. And then return on investment, 12, desired annual return, 12.5%. Because guys, it's a, if you're going to just go buy an ETF and make 9 to 10%, in order to buy an individual company, have your margin of safety, make it worth your while. Analyze button. Okay, I still don't, it's not hitting my sweet spots here. Low side, big skews in numbers, 18 to 35. High side, 30 to 50. Middle range, 24 to 40. So it's not, to me, I look at it going, I love that Warren Buffett has it. He sees something I don't. I'm okay with that. I'm just going to move on from it. I don't see it. Now, if the stock fell in half, let's talk.
Yeah, 4 months ago, we made some assumptions using the stock analyzer tool, and we were right in that spot again, Paul. Our mid-assumptions got us a buy price of 22 to 45. That's what we need to pay to get our desired return. So we're still... So if you're interested, if these numbers speak to you, I know from a personal standpoint, I used to buy stocks and just hope they went up. Paul, I had a discussion with a dear friend of ours today about the difference of assets like a home and stocks versus collectibles. But if this was you and saying, well, I hope I just buy and my own hope, I want it to just go up. And if it doesn't, I'm in trouble. If this resonates with you, you can have this software. You can help yourself make better decisions. Paul, tell them how they can get it right now.
We created the software because our subscribers, people who watch our videos, said, hey, how do we analyze companies without waiting for you to make a video on it? So we said, great, let's make the software. We spent hundreds of thousands, created everything you see here. You get everything you see here. You get it all on your mobile phone. You get 30 years of financial data. You get access to Seth, Mo, and I. You get the whole 8-pillar analysis, stock analyzer tool. You even get real estate calculator and everything on this main page that is coming soon. You'll see right here, everything coming soon here on the right. You even get the portfolios. You can put up to 50 stocks in a portfolio. It'll tell you how they look all together. You get exclusive daily content. That's 2 or 3 videos a day from Seth, Mo, and I, only for our users who buy the software. But most importantly, you get access to our chat. You get all of this for only 90 cents per day. Guys, less than a cup of coffee, 90 cents a day, you get all of this. And the best part is, you get this at the same price forever. Your price doesn't go up as our price goes up with it. You only get increases for inflation. You get all of this, 90 cents a day, 2 ways to sign up. everythingmoney.com or Patreon. The benefit of going directly to everythingmoney.com is we are not large enough yet to charge a sales tax, so you'll save that for the time being. 90 cents a day if you just increase your returns by 1 or 2% a year, or decrease your losses by 1 or 2% a year. It could lead to hundreds of thousands, if not millions. 90 cents a day. Go sign up now.
Do you want to trade Verizon at a quicker pace? There is money to be made on these rises and falls, and Mo can show you how if you join the Bidnass Nation. Go ahead, Mo.
Guys, so if we just look back to COVID, that's kind of our support level that we're sitting at. Let me do a refresh right here. That's kind of the support level that we're sitting at. There is still room for it to fall, though. It's very possible that it can just keep falling. Let me zoom in here. There we go. This is where I'm looking at. It's fallen, with the exception of today being up a little bit, I guess. You know what, guys? From a long-term perspective, I wouldn't even pay attention to this. I would come over here and swing trade this. Just go with these ups and downs. You're under all 4 major moving averages. Swing it up going into the 25-day moving average. Let it do whatever it's going to do, and then try to catch these little blips here and there, because this is so to me, like AT&T, this is a dinosaur stock. This is a very hard stock to trade on a day-to-day basis. Now, with that being said, look at this, Seth. Today, it's a perfect day trade. This is rare, but it's a perfect day trade. The rules are enter over 80% with good buying volume and an engulfing candlestick, which you got at 10 a.m., and you could have bought this thing at 10 a.m. at about $50.40, and you're still in it right now. Your exit point is going to be when this percent K, this number right here, drops below 80%, and that is your exit. So you get lucky today with a stock like this, but to me, guys, I would wait until a time where you see your long-term stochastic going up. just like AT&T, this is a great stock to go long on. But right now is not that time. So if you want rules and you want to find stocks that are good to trade, come and join me in the Bid and Ask Nation. There are tons of people. There's 900 people in there that are all talking about stocks. You get my Trading 101 series, which is a series of videos that teaches you all the rules. Employed Trader series, which gives you 6 stocks that we go through every single day, long, short, long-term swing trades that will make you money if you are a person that works and don't have the time to do this. Exclusive monthly seminars that happen once a month on Saturdays, and the Bid and Ask community, like I said, with 900 plus people.
We will keep you updated on Verizon. Hopefully it falls. We're hoping for most of the stocks to fall, Paul, right? I mean, except Alibaba, which we own a ton of.
Oh, we want it to fall still. I don't want to buy stock at lower prices.
I guess that's true. Fondle a thumbs up. Join the community. You'll get the software, and you'll love it. See you next video.